Hello everybody, welcome to the channel. I'm Greg from Rugosa, and I hope to earn your like and subscription today. In this video, I'm going to talk about my end of day routine and my trading journal. Um, yeah, I'm going to throw this out right at the beginning. I think automated trading journals make for weak traders. I think TradeZilla and TradeView and all those other ones, they could be good, but they're doing you a disservice. In my mind, the trading journal is there just to keep some hard-coded quick reference data that you can refer back to and just to keep your quick ideas on the page. So for this, I don't think there's anything better than using Excel or Google Sheets or some sort of spreadsheet program that is of your preference. So right here, right now, you can see my spreadsheet, and I'm just going to walk you through a kind of a quick overview of what it is, and then I'll show you what I update, here and there, and we can go on. Usually, this whole process takes me 20, 30 minutes at the end of the day. Um, Sometimes it feels like a slog, sometimes it feels like work. If there is anything in my day that feels like something I'd rather not do and push to the end, it is this trading journal thing. But you know what? It it's what creates the discipline, and it's what ingrains my market knowledge and my market footing. This stuff is not going to slip out of there. Like, treasuries are not going to start trading for 113, at a, blink of an eye without me noticing it. Right now they're at like 108, and I'm going to know when they cross over to 109 and 110. It's not going to be a surprise for me. And that's the whole point, and that's what I try to get from my trading journal. Now, the assets that you track and the way that you track your journal, it's all going to be up to you. But this is what I do for me. So let's jump in right now and take a look. So I have things sorted out by weeks. Each of the day is listed out there, and then I have another column for total, which I've never actually used for something I need to sum up. Whatever. Um, Biggest important bit of information for me is at the top. And then when I started building the sheet, I kind of lost track of organization partway through, but whatever. Now that things build, it's going to take more effort to, reorganize things than to just live with it. So, whatever. So anyhow, we look at VIX first and the actual VIX index, and then we look at the VIX term structure, front month, mid month, back month, so month 1, 2, and 3. Then we're looking at the S&P 500. And then we look over at the NASDAQ 100. And by the way, if you guys checked out my TWS layout video, we are just literally looking at these charts and dropping pricing information into the spreadsheet. It's forcing us to look at this thing over the course of the day and get a feel for what happened rather than, just kind of completely going by the seat of our pants. So then we want to look down and we pull OVX, which is oil volatility. We look at the oil contract. Then we look at nat gas. I have never traded nat gas in my life, but nat gas and oil are related in any manner. So it's good to have, I think. I mean, I don't know. Then I've got gold volatility and gold. Go down a little bit more. We got corn. We got wheat. We got 10-year notes. Then I have some parts here for just random opportunities that pop through. If you go through all the weeks in my chart or weeks in my spreadsheet here, those tickers change all the time. This is just a place for me to put down and record stuff, honestly. Um, Then we get down to the bottom, and this is more of overall portfolio metrics. So current cash flow that's coming from options futures trading, options or the futures underlie, equity options trading, equities, and then total commissions paid for the day. Commission drags add up. Make sure you track your commissions. It's important. The amount of money that I've paid to Interactive Brokers this year, you know, could buy me a few steak dinners, that's for sure. And then for some reason, the Netlick change and balance is all kind of broken on my sheet, and I haven't bothered to fix it. So I have to manually adjust it along with the net liquidity. But this gets us into my first entry. So we're at 1456. The market pops back open for overnight session in 3 minutes 15 seconds. So I try to grab my current net lick and my current maintenance margin right now, and throw it into the sheet. This is really important because it keeps you grounded in exactly what your numbers are. So 3261. All right, that looks good. So I've got like net liquidity at 1400. 1400 is when CME closes trading for an hour to do settlements. And I felt 1400 was just a nice time to say this is the end of it, and a new day is starting. You have to pick some time somewhere, and this is the one that made the most sense for me. Sorry, so let's look at max maintenance margin here, which is the current maintenance margin on that. So 1917. Now, when you're trading futures and futures options, this doesn't really happen in equity options unless the broker changes requirements. But you're operating under span margin. So span margin is a risk-based margin metric, or risk-based margin tool, whatever, environment. And that means your margin requirements are dynamic. We want to know what happens. I have not made a single trade today, and my maintenance margin has gone down $20. That's not insignificant. That is a change. That is basically a one whole percentage point of maintenance margin versus net lick for me. Which we can see down here on this row, which is kind of important. And for all of you risk management bros out there, you know that running a 58% leverage ratio, or leverage ratio is kind of high. But you know what? We're single lot Johnny traders right now. We are taking the most risk in our portfolio that we basically ever will. You got to put some skin in the game and be willing to touch the fire, touch the stove in order to make those tendies. All right, let's look down. So that's in. We're all good to go. Now let's go pull that down. Now what I like doing is I like having my 5-minute chart linked up to my overall market monitoring chart. So this is what makes it really nice. I just hit the VIX index right there, pulls it up, and here we go. One thing you might find interesting here is the VIX actually stops tracking for, what is this, 10 minutes during the 20 minutes during the day. So at 8:10, that's the last print, and then it prints again at 8:30. Which is Chicago time, 8:30 Chicago time for cash market open. So there's a time when overnight Globex closes and cash market starts up. I take the that last VIX print of the Globex and use that as my starting number. You can use whatever number makes sense to you. This is what makes sense to me. So we're at 1782. I put that in here, 17.82. And then go over VIX stops tracking at 1515. So that's the number I like to look at. 1515 at 1705. 1705, put that in there. Pull that over. And we see right there immediately on the page here during the course of the day, the VIX moved down 0.77 of a point, 3/4 of a point, just roughly. That ain't bad. That gives us some information. Now, if we want to look back over the course of the last, week or so, we can see, okay, the VIX moved up a bit one day on last week Monday, and then moved down, went up a bit, went down, up again on Monday, went down. Now all these numbers end up changing because of what the overnight ends up doing and where I'm tracking essentially the cash market. Uh, so you have to know exactly what you're tracking and where you're cutting corners and why. You need to make the data make sense for you. But for me, this is showing VIX is in a current state of contraction. And let's see if we can confirm that. Pull out the hourly. This puts us back basically a whole month. Is VIX contracting right here? It certainly is. So there you go. Although you can see, kind of the bouncing around back there. This is where it's going up, and then it just spiked up. But this is where you need to know the limitations of your data tracking. And you know what? Maybe TradeZilla or TradeView is going to be better for that. I don't know, nor do I care. Next thing, you know what? I could make an addition in here of VVIX, tracking VVIX. I don't see that as being enough of an indicator. I see VVIX as being an indicator for the VIX, not asset pricing I need to track. You might feel differently. Totally up to you. The time stamp I take for the VIX is 9 o'clock Chicago time. Why 9? I had to choose a number, but why 9? I chose 9 because for the first 15 minutes of the day, there is a ton of volume that comes out through institutionals placing their orders with the brokers, with the banks, and there's a ton of volume that comes out. Like let's look at let's look at ES right now for volume on the day. You can see huge volume candle here. What is that? 40,000 contracts traded in this 5-minute window here. 5 minutes, 40,000 contracts. Okay. Next biggest window here is just before close at 14:55, and that's 60,000 contracts. During the rest of the day, it kind of tapers off. But at 9 o'clock, you get a lot of volume that's moved through. And for these first 15 minutes, these first 3 volume prints, those are big orders that are coming through. Those are the institutions that are fighting for position to get a piece of this, huge chunk of liquidity that's moving through the market. I want to take that noise out, and I want to see how traders are starting to form price discovery. Price discovery starts to happen around 8:45, 9 Chicago time. And at 9 o'clock, that's when intraday volatility starts to collapse and theta starts to be pulled out of the options chain. Okay? So 9 seemed to make sense in my mind for a time to use. So let's reset this back. And this is one of the reasons, you want to link your charts with your watch list so you can jump back and forth nice and easy. All right, so we got 9 here, 17.7. Then we go, what is the next month at 9? 18.7. Oops, that happens to me a lot. What did I do? Oh, I hit numlock. What was the first one? Was it 17.7? Yeah. And then I think it was 18.7. I don't know. This is why I write this stuff down. By the way, knowing your keyboard shortcuts, will take you a couple days. Learn them, love them. Makes life way easy. Okay, now right away, we can see here that the VIX term structure is basically separated by one whole point all the way through. And we can take a quick look back and see how the term structure has evolved. Does this, is this really doing much? Are things compressing? Are they expanding? What's going on? We also need to keep in mind, too, that the front month contract is July 22nd. I am pretty sure July 22nd is this Wednesday. Yeah. Oh, it's actually tomorrow. Um, huh. Oh, so that's good to know. I usually whatever. You can see how much wishy-washiness it's like. I am not exact. Maybe this is why I'm recovering the account. um, let's look at an actual asset here now. Um, so again, I like to pull just around the tail end of the Globex session. And since VIX stopped tracking at 810, that's when I'm going to stop or start tracking MES. So that's 7514, 7514. And then I want to look at what the low for the day was. So here is 810. The next one over, 815. Where on the chart do we see a low one? That candlestick goes low. So let's put that in. That's 7504. Also, the nice thing is you can move your mouse on the the TWS screen, and it it tracks your positioning, right, and your crosshair candle, but you're still able to keep your keyboard on your Excel sheet. So it's handy. All right. So 75, 54, 25, and then end of day roughly. Okay. So the way that margin works at the end, um, at what is this? 14:30 Chicago time. Institutional prime brokers will send out a warning to their clients that they may be overnight margin deficient. And so that's when, you want to settle out the books, and they may or may not, close the thing out on you. I've actually had a position closed out because I was playing fast and loose with my margin. And then you're like, oh goodness, I need to, buy something back quickly or change stuff quickly. Things get kind of hectic sometimes if you're not prepared for it. So make sure you know when your brokers do your margin checks. 14:30 is one of those times. The next time is going to be 14:55. The last 5 minutes of trading is basically just day traders zeroing out their books because you can get crazy leverage intraday. Um, because the exchanges will allow brokers to provide extra leverage to their clients before forcing overnight margin commitments. And so people zero things out to make that happen. Last 5 minutes is complete noise in the day. It's Don't really bother looking at that. So the time that you really want to look at is 15:15 Chicago time, and that's basically when a lot of futures brokers will say, "Hey, we're actually getting into late night, overnight session here, so make sure you're solid and you're good to go." And that is that point, and that is why I take that point as my end point during the day, and not 1600, which is when CME closes for their clearinghouse consolidation. So that was a bit of a ramble, but there you have it. That's why I take 15:15. So 75. Whoops. 75. If one of you guys can mention in the comments how I can stop that thing from happening by hitting the control button so many times, that'd be awesome. 75, 41, 25. And then just pull that over and we're good to go. Okay, cool. I'm not going to show you any more because they're just repetitive. But I want to show here. Here are my trade entries that I do just to keep track for myself. So this is like my trade journaling, so to speak. Right here, I have a note saying closed 42 DTE, 20 delta short strangle for 47 or 67 points. IV on the chain was 14.4. I netted 4 points on the trade. That was like that was a quick scalp. I basically threw it on end of day Friday and then closed it out like pre-market, and just took the collapse. By the way, the bid-ask spread on that trade was huge. Kind of sucked. Is what it is. The next one opened 32 DTE, 10.4 delta for 12.2 points. IV on the chain was 14.2. Opened 123 DTE, 10 delta, put 59.5 points. IV 15.5 on the chain. Opened 42 DTE, 20 delta, short strangle for 90.25 points. IV at 14.4 on the chain. If you look at one of my other videos, that is that asymmetric iron condor that I threw on. And so anyhow, I put that in there. I list the contract day to expiry. I list the delta, how much I paid for it or sold it for, the points on it, and then the IV on the chain. I don't try to get nitty gritty and figure out what the IV on the actual contract was. I just look at the chain and say that's good enough, because if I can see the chain overall collapsing, I know 9 times out of 10 my individual contract is going to be collapsing as well, and that's all I really care about. That's all I care about. Just a little bit of information to give me some direction, and I don't want to spend a ton of time doing this stuff. I just wanted to make it work for me. And that brings me back to the original point of having some of these automated trading journals they go through. They'll be great. They can pull all this data for you, but you can just pull up a chart and look at it yourself. You're not getting the reps. You're not getting that muscle memory. You're not burning this market knowledge into your brain so you can sit there and confidently deploy risk or assume risk or trade risk. Like this is what we're doing. We're looking at the market and we're trying to make a buck, and you need to know where the weather is at all times. This is how I personally figure out where the weather is at all times so I don't get hit by like a hurricane or something like that. All right. Thank you for watching the video. I hope you guys got some value from it. Drop a comment if you feel like. If you've got any questions, I'll be happy to answer them if I'm able to get to them. And have yourselves a great day. Happy trading.